And this is Bloomberg Technology. Coming up, Amazon declares we will crunch first quarter numbers from today's report as America's e-commerce king closes out earnings season for the biggest tech companies. Plus, the other big tech scorecards on tap. We dig into results from Intel and Microsoft. And calls for Mark Zuckerberg echo across the pond after UK officials slam testimony from Facebook's CTO. Why British lawmakers are fed up and frustrated with the social network. But first, to our lead. Amazon shares are soaring in late trading after reporting first quarter results. The company forecasts second quarter profit that topped analyst estimates. This buoyed by swelling ranks of Prime subscribers and a profitable cloud computing division that is winning more and more corporate customers. Here to break down all the numbers, Crawford Del Prete, Chief Research Officer at IDC. Also with us, Bloomberg Technology Senior Executive Editor Brad Stone. So just to give you an idea how good a quarter it was, Jeff Bezos' wealth has risen $12 billion just today. So, Brad, what are the highlights?
Well, I mean, first of all, I have this sort of same feeling that I did on Tuesday with Facebook, which is what was all the noise about, right? The environment around Amazon really captured by President Trump's tweets, the post office, and yet none of that matters today. You know, it's a beat on all dimensions. I mean, look, Amazon's growing very quickly. They added a 60% increase in hiring year over year, and yet a $1.6 billion net profit, like unheard of at Amazon. And for a couple of reasons. One, the very profitable parts of the business like AWS and the other category, which is advertising, are increasing. And then that North American retail business is going up also, probably because of those 100 million Prime members, which Jeff Bezos emphasized the other week.
So obviously the tweets from President Trump haven't had much of an impact. However, shipping costs did rise 38%. Lots of noise about the U.S. Postal Service and whether they might raise prices as a result of some of the things that President Trump has been thumping on. Crawford, when you take a look at these numbers, do you see any red flags, any weakness?
No, actually, it's kind of the opposite right now. You're seeing, just as Brad was saying, you're seeing this massive multiplied scale that the company is experiencing right now. So, yeah, you're going to see shipping costs rise because that's related to the top line, and that's related to the amount of business that they're doing on the consumer and, parts of the commercial side where they do business. To me, in Bezos's quote in the press release where he talks about the significant lead that AWS has and how they really had very little competition for the last 7 years, what they're doing now is they're adding services to AWS, and that translates into not only revenue, but significant profits because it's kind of a subscription business on a subscription business. And we're really seeing that multiplied scale in the huge increase, the almost 50% increase we saw for AWS.
And, I should mention that Microsoft also reporting today their sales strong, also in part due to the cloud business, Brad. AWS is far in the lead. Are companies like Microsoft and Google really a threat, or is the pie really just expanding?
I think the pie is increasing. I mean, 48%. AWS is accelerating, right? I think it was in the 44% category last quarter. So, right. Yeah, it's just that this is a wind that is propelling all these companies forward, and the companies that are suffering are the ones that weren't as early in the cloud.
What about some of the other businesses, younger businesses like grocery delivery and Whole Foods, like Alexa and Amazon Echo, Crawford? These are small businesses now, but how big could they become?
Well, they could become, quite large. We're going to see, very significant growth in Alexa, because I would put, and again, that'll be, high double-digit growth for a long time, because they're trying to build out that platform for the foreseeable future, and they have a significant lead over, guess what, Google, and a very significant lead over Microsoft and Apple in that platform. And what they want to do is start connecting these services together. So you're going to see a huge push toward combining the power of AWS to Alexa, platform to platform, to be able to connect and intelligently control more devices in your life. Whole Foods, on the other hand, is just a fascinating acquisition, because obviously we're seeing the benefit of that acquisition now in terms of, a year later. But we're really, I think we've just begun to see them be able to unlock some of the power there in terms of how you can combine the AWS platform to the Alexa platform to the Whole Foods experience. And, that party is just getting started.
If you're an Amazon investor, Brad, what are the risk factors, if you will?
Well, you're probably pretty happy today. I mean,
Right.
Regulation has to be one of them. And, Jeff Bezos said in Germany earlier this week that this is a conversation that probably will and needs to happen around all big tech companies. On the media call with the Amazon CFO, somebody asked him about that. He kind of declined to answer it. But, you gotta think that at some point, particularly under President Trump, and everything that's happening in Europe, that Amazon is forced to answer for some of the ways it, for example, sells advertising, some of the ways that Alexa advertises for Amazon's white label products, Amazon's relationships with its suppliers. So, that's probably the big question there among investors.
Let's talk about advertising. The other revenue category for Amazon more than doubled to $2 billion. That's in part because of Amazon's advertising business, which some analysts are very excited about, thinking that it could at some point surpass Facebook and rival Google. Crawford, what do you think about that?
Yeah, I think you don't want to get too far ahead on your expectations. I think that people are probably really, really excited right now because they really haven't known what to make about this business and how fast to model it going forward. And clearly, the statement today is that this business is a real business and it's accelerating, and it can accelerate based on the platforms that Amazon is building. I would just like to respond to one other question that you kind of brought up a second ago, and that is, what are the kind of headwinds going forward? I would put it in the category of expectations. The expectations are going to be massive for this company going forward, notwithstanding what their guidance is. And I think that, trees don't grow to the moon. I mean, this is Amazon's moment right now, but managing how fast these businesses can grow and what the expectations are, I think that's going to be an increasingly large challenge for the company going forward.
And we haven't talked about Prime Video yet, but, Brad, on the sidelines of this earnings call, they've also announced that the NFL is renewing its agreement with Amazon Prime Video.
Right, and this is, this is a cost center. This is a part of the business that doesn't really visibly bring in any revenues. They say that there's a connection to Prime membership and retention, but they're clearly concerned about Netflix, which is on its own runaway growth streak, and they are investing heavily in new shows. I don't, it's multi-millions to do that Lord of the Rings series. They're renewing some of their more high-profile shows.
And this is a part of Amazon that has been in turmoil, right? I mean, they lost
Roy Price,
the head of the division,
Amazon
who left
Studios. I would argue that they haven't quite figured it out yet, certainly not in the same way that Netflix has. And so it continues to be a work of progress, and it's remarkable that this is a company that, shows $1.6 billion in net income, despite the fact that they're spending like a drunk sailor in Hollywood right now.
All right, hang on. I do want to talk about another company out with earnings, and that is Intel, giving a better than projected second quarter sales forecast, proving that for now, the computer industry just can't quit its products. Sales in the current period will be $16.3 billion, and its data center group grew 24% in the first quarter. Under CEO Brian Krzanich, Intel is increasingly touting its efforts beyond PCs, processors, and a business that's long provided the company with the majority of its income. Crawford, I know you've taken a brief look at the numbers. What's your take?
Yeah, my take is that we were all paralyzed with Spectre and Meltdown last quarter, and everyone was concerned that this hack would be exploited and that Intel would, really have trouble associated with this. And what we're seeing is a rebound at Intel in terms of their ability to grow profits and expand EPS in this business. That 49% growth we were just talking about at AWS in the cloud, turns out those are Intel chips, and that's where you're seeing this 25% growth in their data center business. Extremely profitable business. Intel is pivoting the company in that direction. And then, oh, by the way, the Left 4 Dead category, which was PCs that everybody thought was going to shrink down to nothing, actually that category grew by 3%. Now, they are seeing competition from people like AMD, who are up significantly in the quarter. But, really, that's on the desktop. Intel did a great job in commercial notebooks and really defended and expanded even the PC space. It was a solid quarter.
And of course, there are companies like Apple, like even Facebook potentially making its own chips, which is a threat to Intel.
Well, I was going to add to what Crawford was saying. We have heard that Apple and Facebook and Microsoft and Amazon want to make their own chips, but that clearly has not dented Intel's data server business. If anything, those companies are spending so heavily in their own data centers and the cloud that it is now propelling Intel.
Okay. Brad Smith, our senior executive editor for Bloomberg Technology. Thank you, as well as Crawford Del Prete, Chief Research Officer at IDC. Always great to have you both.
Thanks.
Coming up, tech's latest revolving door. Intel has hired Tesla's Jim Keller to oversee chip design. Keller previously led Tesla's effort to develop its partially autonomous driving system. Intel said Thursday in a statement that he will lead Intel's silicon engineering as a senior vice president. The 59-year-old had 2 stints at AMD and was integral to Apple's push to design its own chips. Coming up, we continue our coverage and reaction to earnings. Microsoft beat forecasts on the top and bottom line thanks to rising demand for cloud services among corporate clients. We're going to break that down next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, in the U.S. on SiriusXM. This is Bloomberg. Continuing our coverage of tech earnings, Microsoft reporting its third quarter results, sales coming in $26.82 billion, while revenue from its cloud segment topped $7.9 billion. However, shares of the company flat after hours. JP Gounder is a principal analyst at Forrester Research, along with Crawford Del Prete from IDC, who is still with us. JP, I'll start with you. Why are Microsoft shares flat? Certainly a different tale than what we're seeing from Amazon, as we were speaking about moments ago.
Well, it's clear that Microsoft beat all the expectations, so they kind of executed the way that they were supposed to. It could be something related to Amazon, right? I mean, although Azure revenue grew 93%, AWS grew by 49% from a much larger base. So it may be that there are some strategic concerns about how quickly Microsoft can catch up. But overall, this was a really, really good quarter for Microsoft, it should be said.
Crawford, do you see those strategic concerns at play here?
Yeah, I think that JP is onto something. I think that when you look at the massive base and share that Amazon has with AWS, 93% kind of runs great in terms of when you look at the number. But when you look at where they're coming from, I think the expectation is that they're going to have to stay at that level, which by the way, they've been at levels close to that for quite some time, or accelerate in order for them to continue to gain on AWS. Now, make no mistake, this is in North America a 3-horse race here between Amazon, Microsoft, and Google, and they're all relevant. But I think it really comes down to that expectation around how much ground can Microsoft gain relative to what AWS is putting up there.
How much ground, JP, do you think Microsoft can gain? I mean, do you think that Microsoft can be a close number 2 contender here at some point?
At some point, perhaps. Right now, they have a lot of work, as Crawford referenced. The reality is that there is a lot of green space here where the market, there's just markets that have been untapped. So it's not always highly competitive. For example, they're not necessarily trying to displace AWS. They're trying to gain new organizations into their portfolio faster. The other, factor here is AI. And both Amazon and Microsoft are offering an increasing number of AI skills that sit on top of those cloud platforms that allow people to build smarter applications. And this is very central to Nadella's vision for Microsoft, is intelligent cloud and intelligent edge. And again, so far, he seems to be executing quite nicely against that vision.
Crawford, beyond the cloud, what are you seeing? What are the highlights? And obviously, this is a company that has made a huge transformation, given that not so long ago, another business was its main bread and butter. Yeah,
absolutely. So a couple of highlights. So what Microsoft calls this productivity space. To see Office 365 putting up numbers close to 30%, 28%, depending upon the segment. I mean, congratulations to Microsoft. They have pivoted this company from being in the productivity software business to being in the productivity software as a service business. And they're really doing a great job of moving customers to that model and building a subscription business for the long term. So I think that business continues. And I would argue that is arguably the second most important jewel kind of in the Microsoft crown right here is that productivity segment, specifically Office 365. I also think that Surface revenue coming in at 30%. We just talked about Intel a few moments ago. I mean, you're talking about a PC market. Intel, in the aggregate, grew that business 3%. Surface was up 30% in revenue. So again, it's a hot product. It continues to be a hot product. They continue to build out that portfolio. And then over and above that, this sort of more personal computing segment, which is up 13%. That's going to include Windows. It's going to include Xbox, and it also includes that Surface number I just gave you. But again, that was a big surprise. That's been kind of a stagnant category for Microsoft for a little while. So clearly, they saw some nice moves. And I suspect that some of their Windows numbers were up based on the commercial notebook number that you saw up. The commercial mobility, number that you saw up in Intel's number. I suspect that's probably driving some of the Windows number up as well.
Well, and there is, a bigger story about how Windows has adapted as its business importance has declined. Right. I mean, obviously, the company still makes money from Windows, but certainly not as much, though it is still core to this productivity suite, JP.
Yeah, I mean, look, the rumors of Windows demise are greatly exaggerated. This is over 700 million Windows 10 users, organizations, particularly commercial organizations, adopting it for security reasons, for productivity reasons. So, in the future, Windows will continue to be an important part of Microsoft's business, but it's going to be subsumed under this experiences category, experiences and devices, along with portions of Office. And that makes sense. It's all about empowering people to be more productive. And this is something that is very much within Microsoft's wheelhouse. I think it's also important to double down on that Surface number. Although there was some life cycle periodicity at work, Surface has been a very, very powerful asset for reinvigorating and inspiring other PC makers on how to move forward.
JP Gounder with Forrester Research, as well as Crawford Del Prete of IDC. Thank you both.
Thanks.
Thank you.
Coming up, it is take two for Snap, rolling out another version of Spectacles. But how will customers respond? This is Bloomberg. Snap is introducing a new version of its Spectacles. This latest take will be able to take photos, not just videos, and record higher quality sound. And this time, the company is going to be smarter about predicting demand after losing nearly $40 million on the venture. The company will now only sell the glasses online. Even though AI has grown by leaps and bounds over the last decade, outsized predictions about it destroying humanity or powering utopia haven't come to pass, at least not yet. Bloomberg Quick Take explains what AI does for us now and why people like Elon Musk are so wary about its future.
We've all seen Terminator 2. The year is 1997, and artificial intelligence is trying to destroy humanity. That prediction hasn't come true, at least not yet, but AI is very much here. In the past decade, artificial intelligence has found real-world applications in everything from hedge funds to beer brewing. And far from destroying humanity or solving all of its problems, experts question how much farther AI can go from here. Artificial intelligence is software that solves problems. It examines a problem, ventures a guess about what's going on, and learns from what happens when it acts.
You could think of it almost like a giant Excel spreadsheet where you're running statistics to try and find the best guess.
That's Bloomberg Tech's Ashley Vance.
Is this an apple? Let's run all these calculations to see if the computer thinks it's an apple and has qualities that remind it of an apple.
The companies that are making the most use out of AI today are companies like Facebook, Google, Microsoft, and Amazon.
It's pretty basic stuff like recognizing your face in a photo. It's translating a menu on your Google phone. It's using computer vision in a self-driving car to see where other cars are and where obstacles are.
Some of the first attempts to create artificial intelligence were in the 1950s with the arrival of neural networks, which is software that can process data with some of the pattern recognition techniques that take place in our brains. But it wasn't until the last decade that AI really started to take off.
The internet finally supplied the kind of data that these neural nets needed for sustenance, huge volumes of images and text, and that's what allowed all these AI algorithms to take off.
Today, AI systems can beat humans at things like trading stocks or playing the board game Go. They're in driverless cars and can help identify tumors. But the technology remains limited. Today's AI still needs humans to occasionally tell it, yes, you're doing the right thing, or no, that doesn't look right.
The end goal of all of this is to create something that's called an AGI, which is an artificial general intelligence, which would be an AI that didn't need a human to hold its hand, to tell it what to do.
There's a lot of debate about when or if we will ever see AGI. Even the possibility has made skeptics of people like Elon Musk and Bill Gates, who warn that AI might end up automating so many tasks that millions of humans could end up without jobs, or lead to other unforeseen calamities.
With artificial intelligence, we are summoning the demon.
Coming up, Amazon out with first quarter results. Shares jumping over 6% in late trading. The company poised to open at a new record Friday. We're going to bring you the latest next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. For some breaking news, Reuters reporting that Sprint and T-Mobile are aiming to clinch a merger by next week. Shares of Sprint and T-Mobile spiking after hours on these headlines. Of course, we know that these two companies have been trying to merge for quite some time. It has never happened for one reason or another. So, of course, we're going to continue to follow that story. But according to Reuters, sources speaking to Reuters, T-Mobile and Sprint aiming to clinch a merger by next week. But back to our top story, Amazon reporting blockbuster results, shares jumping over 6% in late trading. Jeff Bezos, the CEO, has highlighted the company's gains in AWS, which increased 48.6% year over year. There was $51 billion in revenue, representing a 43% year over year growth. In New York with more, we've got Bloomberg Tech's Garrett DeVink, who's been following along, listening to the call. Garrett, any additional nuggets here? We know that Prime subscribers have soared. We know that AWS have soared. What new analysis do you have?
Well, the big number that people are responding to in the shares is that they actually increased their forecast for next quarter. So analysts were expecting, on average around 52, and the range they gave was 51 to 54. So that kind of pushes beyond, what people were expecting in terms of, what's going on next quarter. So this quarter was great. Next quarter is going to be even better. But another key number to look at here is they doubled the advertising revenue. So this is a pretty new business for Amazon, at least in the context of the company's history. And it's online advertising, the same business that Google and Facebook are dominating now. Amazon is sort of the third kind of player, the dark horse in that space. That's going to be a really interesting place to keep watching.
Let's talk a little bit more about AWS, because AWS continuing to grow very fast from an already very big base. How much bigger can it get?
I mean, this is the infrastructure of the internet. This is the infrastructure of, the future of business. AWS is what any company, big or small, can use to sort of, host their services online, store all their information, data, that kind of thing. As more and more businesses go online, small to big, this category is going to keep growing. Now, of course, AWS has a head start. That's the way that Bezos categorized it. He said, we had a 7-year head start, which is sort of uncharacteristic for any kind of business. But Microsoft and Google, other players, IBM among them as well, are all racing to jump into this market. It's a growing pie, but also the competition is very fierce.
Still, I'm looking at our top live blog, Shira Ovide of Bloomberg Gadfly. It was the highest operating profit margin since the middle of 2016, but it is still laughably small compared with a company like Facebook. Why does Amazon get so much more leeway from Wall Street?
I mean, this is Amazon. They're just a growth machine, you know, and Facebook gets a lot of leeway too, right? I mean, they had a really tough couple months, and you know, they just sort of reported some good numbers and had some positive commentary, and their shares, you know, shot up today as well. So, you know, the tech companies, you know, the message overall this week is that investors, you know, they're pretty happy with these results, and they can kind of put the last couple months of controversy behind them.
All right, Garrett DeVink, Bloomberg Technology, thanks so much for that quick update. Now, in the wake of the Facebook Cambridge Analytica scandal, lawmakers around the globe demanded answers from the social network, specifically CEO Mark Zuckerberg. And while Zuckerberg did attend the hearings in Washington, he sent his chief technology officer, Mike Schrepfer, to speak with British lawmakers on Thursday. Take a listen to this exchange between conservative UK lawmaker Julian Knight and Schrepfer.
I put it to you today, sir, that Facebook is a morality-free zone, destructive to a fundamental right of privacy. You aren't an innocent party, wrong by the likes of Cambridge Analytica, but you are the problem, sir. Your company is the problem. What do you say to that?
I respectfully disagree with that assessment.
All right, okay. So you see yourself as somehow morally innocent in this respect?
No,
despite this catalogue of behaviour.
Look, I think what you want from an organization is transparency and responsibility. You want us to say when we're responsible for things, which we have in multiple cases. We've talked about
only when you've been dragged
mistakes
kicking and screaming into that situation by inquiries such as this.
and you want transparency on things like ads and whatnot. And again, the core, this is not where I spend my day job. The core of the job we spend is to try to build a service that helps billions of people around the world connect with each other every single day.
For more, I want to bring in Bloomberg's Caroline Hyde live from London. So tough talk there, Caroline, from UK lawmakers, some pushback from Facebook CTO Mike Schrepfer, or Schrep as they call him internally. Was that very much the tone of the entire day?
Yeah, it was tense. It was a tense discussion that lasted more than 4 hours, Emily. And you heard it. I mean, it seems as though in Europe there's tougher regulation and there's pretty much tougher questions coming from the politicians as well. Notably, there were things like calling them a vampire, a giant vampire squid. Remember that rather rude turn of phrase levelled at Goldman Sachs during the era of the financial crisis. We had Facebook being likened to cigarettes and its addiction. But we did hear some committee feedback that was positive. The committee liked some of the things that the Schrep was telling them. Notably, the committee liked the fact that they were going to commit to bringing transparency to elections, in particular to electoral advertising. He says that they're going to ensure the political ads are vetted in time for local elections here in 2019. Take a listen to what he promised.
We're actually going to mark all of the political ads prior to the 2019 elections here in the UK. We are going to provide a searchable archive of all of those ads and explain who paid for those ads and provide a lot more transparency for people who want to understand this. Because I understand the concerns about giving people control over political advertising. It's an important issue that we are working on.
This is important for the committee because they've had a 14-month investigation into how social media affected elections, affected the spread of misinformation. So this was key.
So, Caroline, still potentially calls for Mark Zuckerberg himself to come to the UK. Do you think that could come to pass?
Yeah, this is really interesting. This is where the pushback game, because they're not happy at the moment. Perhaps they were never going to be happy with the fact that Mark Zuckerberg didn't come to see them. He saw them in Washington. And what really antagonized the politicians is it seems as though Mark Zuckerberg, during this committee hearing, was actually saying that he might be going to the European Parliament to answer questions. This was read out by the head of the committee. And I think this is really inflaming the aggravation that is among the UK politicians. Why don't they get their turn to really question Mark Zuckerberg? Notably, they said, listen to this, Mr. Schrepfer, they say, Mark Zuckerberg's right-hand man, whom we were assured could represent his views, well, today failed to answer many specific and detailed questions about Facebook's business practices. This is what was fired back by Damien Collins, the lead of the Digital Culture, Media and Sports Committee, basically saying that the Schrep was unable to answer some 40 questions or so. One of them was whether they knew about the Cambridge Analytica Analytica data breach in February when they were talking to executives in Facebook. Then they feel misled in that particular department. They felt that they perhaps were angered that they couldn't get an answer to the question of whether they could absolutely block all sorts of categories of ads. Notably, they brought up GDPR as well, and they didn't feel they got a good answer on what is going to be put in place by Facebook to ensure they're in ahead of this new strict regulation coming into the EU on May the 25th. Crucially, also, there have been reports that Facebook have moved 1.5 billion, get this, 1.5 billion accounts of Facebook users who aren't in the US or Canada or EU. They're moving them from Ireland to the US, to California, ahead of GDPR, the strict regulation coming in May 25th. There's been rumours as to why they're doing this. Facebook saying, look, people outside the EU will get the same privacy protections and controls and settings as inside the EU, and don't worry about this. But many wondering whether they're trying to avoid this sort of regulation by doing that. So I think there are key questions they felt weren't answered. Therefore, will he come to the UK? I leave you with this. We believe, says the head of the committee, given the large number of outstanding questions for Facebook to answer, Mark Zuckerberg should still appear in front of the committee. What could they turn to, Emily? They could use a little, rarely deployed legal step. This would be a formal summons. We'll see whether he gets it.
And Caroline, of course, GDPR rolling out later this year. You know, talk to us about what we're expecting with that rollout, and could there be additional legislation as a result of the more recent concerns around Facebook?
I think at the moment this would come to ease concerns in the EU. GDPR, they feel, is ahead of the curve. The general protection data rules, they feel, would not allow any such occurrence to happen again. If this had been in place in 2015, there is no way that Facebook couldn't have told users that potentially there'd been a data breach and that it had been passed on to Cambridge Analytica, and therefore even used in an untoward way during elections. So this would be very strict regulation. So I don't think that the EU is feeling there needs to be more built upon the GDPR rules when they come into effect in May 25th. But certainly I think they want an era of transparency to be at the behest of all these big tech giants. Remember, this comes at a time where we've seen the EU, notably Germany in particular, passing yet stricter and stricter regulation when it comes to taking down fake news, when it comes to taking down terrorist-related content, fines being imposed in Germany. So I think there could still be more regulation to come. But when it comes to data, I think they feel GDPR will prove that sort of, it will stop anything like this repeating once again. Emily.
All right. Bloomberg's Caroline Hyde for us live in London. Thank you so much, Caroline, for that report. Well, Baidu shares are jumping in extended trading on a solid first quarter, with sales surpassing analyst estimates and an upbeat outlook ahead. Baidu is China's most popular search engine, and advertisers are flocking to its news aggregation service. Its Netflix-like video service is also seeing subscriber growth. Baidu is entering a critical year after selling or spinning off non-core businesses, including food delivery. Coming up, after PayPal's strong earnings results, we're going to hear from CFO John Rainey to weigh in on rising competition in online payments and possible M&A. This is Bloomberg. Sequoia Capital is said to have raised $6 billion towards the U.S.'s biggest venture capital fund and plans to raise $2 billion more. Top venture funds have exploded in size recently to compete with the SoftBank Vision Fund and that $100 billion target. SoftBank has written massive checks to startups like Uber and India's Flipkart. And PayPal reported earnings that beat analyst estimates in the first quarter and gave an optimistic forecast for the second as it continues to add new accounts. But what about rising competition in online payments? PayPal CFO John Rainey discussed that earlier on Bloomberg Television with Vonnie Quinn and Mark Barton.
We've seen a lot of interest in this high growth business that we're in, and with money moving to digital payments, there's a lot of companies that want to participate in this. We're going to continue doing what we've done, and if you look at our history since we've separated from eBay, in a fast growing e-commerce market, we've actually expanded our market share. We do that by having a very powerful two-sided network where we have over 200 million consumers on one side and almost 20 million merchants on the other side. And there's a a network effect to that. But one of the things that stands out at PayPal is the simplicity and ease of use for our consumers. So one of the things we measure is conversion rate. And we have an 89% conversion rate, which is appreciably higher than some of our other competitors, which is how we're able to continue to expand that market share.
John, your peer-to-peer payment system, it's a tongue twister, has continued to see strong growth. When's it going to make money?
Yeah, so P2P is a very exciting part of our business, and to your point, it's one of the fastest growing parts of our business, and I think it's reflective of the change in consumer sentiment around digital payments, and that more people are using their mobile device to exchange currency with their friends and their network of peers. For us, one of the biggest parts of P2P for us is Venmo, and Venmo is something that has an almost sort of viral effect when it takes hold. And one of the things that we've done with Venmo is previously it's been entirely P2P. We're now embarking on monetizing that. The way that we do that is to allow our Venmo customers to go shop at our merchant network across the world. And that's how we monetize that. We're still very early on, but very excited about this opportunity.
John, on the Bloomberg, we can check, where you get your revenue from. I see here in the UK, 11% of your revenues come from here. You've announced this Barclays attachment today. You're teaming up with Barclays for payments, small business services. How easy is it? What's the business environment like here to attract new partnerships?
Sure. Well, I'd start with the point that you mentioned, that we are a very international company. About half of our revenue and more than half of our customers are outside of the United States, and the UK is a very important market for us. The partnership with Barclays is an extension of several other agreements that we've embarked on, where we really pivoted about 2 years ago to have more of a partnership strategy, being an open digital payments platform. With Barclays, we can now allow their customers to vault a debit or credit card into the PayPal wallet with a lot more ease, and we're very excited about the prospects of this going forward.
I'm curious, John, as to any potential M&A targets in your sights?
In terms of the M&A landscape, this is a key pillar of our capital allocation strategy. Of primary importance for us is growth. We're a high growth company, and when we focus on growth, that can be organic or it can be inorganic. And we've had a history of very successful acquisitions. We want to continue down that path. But as you can appreciate, M&A activity doesn't necessarily happen in a linear form. They come in waves sometimes. And so we're always canvassing the landscape for the type of opportunities out there that complement our existing platform with some of these other financial services, or allow us to expand our presence in certain areas of the globe where we're not as strong.
That was PayPal CFO John Rainey. Coming up, more on Amazon's first quarter earnings call. The call currently underway. Amazon CFO Brian Olsavsky just spoke about the price of Prime going up.
Effective May 11th, we're going to increase the price of our U.S. annual plan from $99 to $119 for new members. The new price will apply to renewals starting on June 16th.
Continuing to cover tech earnings, Amazon and Microsoft out after the bell. Amazon having a blockbuster first quarter, jumping more than 6% in late trading. And tech earnings don't end just yet. We're awaiting earnings from Apple, which reports this coming Tuesday. Joining us to break down earnings so far, Bloomberg Tech's executive editor, Tom Giles. So, Tom, start with Amazon and the big picture, the call happening right now, though we did just hear that the price of Prime is going up for the first time in 4 years.
Prime's going up $20 a month, $20 a year. So bummer for those of us who are subscribed. But Amazon knows they kind of have us over a barrel. They know we'll pay it, right? A lot of people, they spend a lot of time talking about Prime and the benefits of Prime, the impact on Whole Foods and the relationship between the benefits you get if you're a Prime subscriber and you go to Whole Foods. A lot of discussion around that on the call. Amazon very confident in its prospects. This is a big contrast from earlier this year when we saw all this bearishness flooding into the tech sector, particularly around Amazon. It was a question of Trump and his tweets and what's going to happen with the post office, and are postal rates going to rise? And that stuff is like a distant memory at this point, at least for the moment. you see we're looking at maybe a record high for Amazon stock heading into tomorrow.
Right, Jeff Bezos made just $12 billion today. Interestingly, though, I mean, just a few days ago, we had analysts out there calling a tech bubble having burst, about 5% worth. And then over the last few days, we've seen many of these companies make it all back.
Right. Yeah, there's been a lot of interesting stuff going on, and you've seen like this separation from this group of stocks that we used to refer to. I never did, but people call them the FANG stocks, right? And you started to see kind of the exceptions to that, the Netflixes of the world going up and up and up. Interestingly, Microsoft actually was very, very resilient through all of this. And you saw a couple other stocks heading the other direction, right? You saw Apple going south a bit, Facebook under tons of pressure. Let's talk first about Apple. Now, Apple is not out of the woods in any, as much as we've gotten great news from the rest of the tech sector this week. Apple we're going to hear from, as you mentioned, next week. Still a lot of question marks about their smartphone sales and whether the X was the right strategy. So we'll be talking a lot more about them in the coming days. But a lot of these other tech companies, Facebook in particular, proving the naysayers absolutely wrong. We're still growing.
Meantime, Microsoft shares up slightly, well, now about 2%. Their cloud business still growing, but certainly not as fast as Amazon and not included in the FANG, if you will, that very Wall Street term.
Right, exactly. I mean, what's interesting about Microsoft, though, is that they have been super resilient through the last several months and weeks of this weakness in the rest of the technology sector, very close to records. And so after the results came out, didn't get the bump that you saw in Intel and Amazon, but again, they've been very, very resilient. That stock has been up very close to record, and as you said, right now they actually might be a little bit in the red.
All right, Tom Giles, our executive editor of Global Tech, thank you so much for wrapping it all up. And that does it for this edition of Bloomberg Technology. We're going to continue our coverage of tech earnings this Friday. Tune in for an exclusive interview with Expedia CEO Mark Okerstrom. This is Bloomberg.